Kaustubh Belapurkar joins us, represents Morningstar. Kaustubh, whereas global investors are having a very divergent view and divergent approach in how they are buying, what they are buying and selling, locally, I guess in the month of Jan, the consensus trade has to be financials only.
Nikunj, surprisingly so, it's been a little different in the month of Jan. We've had financials actually being sold off on profit booking. Rather, we've had stocks like Bharti that were bought into. We had counters like Infi, ITC, which is a more defensive play, and some of the cyclicals or the utilities companies like Power Grid and NTPC that were bought into on the large cap side. So I think managers have taken a pause on the financial space. They have been buying for the last 15 months. They've clearly seen that the stocks have rallied in Jan and they've taken some money off the table, which is, I think, a good sign. In fact, if you look at the top bought stocks, you just see an SBI featuring in it, whereas you see a lot of banks and an HDFC in the top sort of selling names. So that's an interesting sort of move by the managers in January.
Which stock has seen the maximum, or which large cap stock has seen the maximum amount of commitment and maximum amount of selling?
Yep. So Bharti's been, the stock that's seen the largest amount of buying, and we've seen Bharti's exposure being, over the last 4 to 5 months, where managers have actually been adding on to Bharti. A couple of triggers, obviously, Jio raising prices. Now Bharti is also talking about listing the African ops. So I think generally managers are more pro on this particular stock within the communication services space. I don't really see them buying any of the other counters. On the selling side, a stock, ICICI Bank, which has actually been the darling of the street for so long now, given the meteoric rise, they have booked some profits, I would say marginal, but you've seen about 1,000 crores of selling in the month of January on ICICI Bank.
Right. Kaustubh, give us a sense. I'm also looking at in the large cap buys, Z Entertainment and Power Grid. Now, they're typically not seen as high ranked stocks where institutions will build a lot of exposure. They are fancied by the markets even so. So what are the trends that you're picking up there?
I think I think managers have clearly seen that we want to look at some other counters beyond what's been happening in 2017. So Z, there was an option where one large manager got in and bought out stake which SL, the holding company, was selling out. So they did go out and buy that stake out. Power Grid, again, it's one of the large managers in India. So it's not a very broad-based sort of thing. It's more of one or two managers really taking that call and taking sizable exposure in those counters. But we're seeing more and more managers, take those sort of calls and move beyond what's really been happening in the past year.
Right. And among some of the small cap buys, you have the likes of Varun Beverages also being part of the list. Is the beverage sector particularly finding some fancy in the markets as an extension of the consumer theme?
So consumers definitely, I think, have seen a fair bit of buying. Obviously ITC was one of the picks, which continues to be a favorite, a more defensive play. But I think Varun, interestingly so, like we can see even the tone that's coming from PepsiCo that they are the largest bottler for them, and Indra Nooyi has come out and said that they will look at giving out more bottling franchisees out, and Varun could be one of the largest beneficiaries of that. We've also seen them getting a distribution tie-up with PepsiCo for their non-carbonated beverages, the juices and Gatorade and things like that. So I think generally there's a positive sense about this counter, and clearly we've seen managers get into this stock.
Kaustubh, morning. Tempted to ask you what's the flow like when it comes to PSU banks, and considering SBI is large part of the holding for many mutual funds, has there been any aberration there, any resentment towards some of the other smaller PSBs? I'm not even getting to PNB, but a clutch of others?
January is, obviously we saw SBI being bought. I don't suspect it will be any different in February. But we haven't really seen too much activity on the other counters any which ways. The one thing, since you spoke about PNB, interestingly, in the month of December, PNB had this huge QIP where we had a few managers that did subscribe to it. In fact, if you look at last month's data, it was actually the top bought stock. Yes, the managers did buy a fair bit of PNB in December, and they will probably take a wait and watch approach, but I didn't really see them going beyond a BOB and a PNB and an SBI when they were buying. So there's not been much selling on these PSU bank counters.
Where is it that you've seen the maximum selling come in post the budget up until now? What's been the feelers that you're getting as to where the concentrated exits have been?
So some of the large exits and where a lot of money has been made, right? So financials where they bought so much through the years, clearly you can see ICICI Bank, HDFC Limited, IndusInd Bank, even some profit booking on HDFC Standard Life, which has given some really handsome gains post listing. So we've seen a lot of selling on sort of the financials. It's again profit booking. I wouldn't say broad-based selling, but definitely large numbers being sold there. L&T is another profit booking opportunity that managers have used in January, and a couple of select steel counters like Tata Steel and JSW Steel where they have just pulled some money off the table.
And IT is coming back, in fits and starts. You're looking at Infosys being part of the top buys, which you I think highlighted as well. But do you see that broadening out to some of the mid-cap IT names as well?
We haven't seen signs of that as yet. So, for instance, last month was TCS that was being bought. Infy still remains the most popular stock, and we've seen a lot of addition in this month. In fact, some of the other names like HCL Tech or TechM have actually seen reductions in exposure. So, I think it's still a slightly select play in IT. It hasn't really trickled down to all. Cient is one counter that's been seeing buying over the last few months, but it's not broad based yet.
Okay, and I just wanted to know a quick, get in a quick perspective on some of the infrastructure related names. And what is standing out within that aside of L&T?
So in fact, if you look at this month, we've seen a fair bit of construction company buying. So you can see some names popping up: Nagarjuna Constructions, ITD Cementation. You have the likes of Dilip Bilkon, Simplex. They've all. So in fact, that's been one play that we observed in January, where a lot of managers have actually added exposure, in the engineering and construction space.
Tempted to ask you, Kaustubh, what is happening in the mid and the small cap range? Because while you did touch upon the fact as to where you're seeing buying, but where is it that you've seen the maximum selling coming in post the budget when the LTCG tax was announced, and then of course we were also part of the global sell-off which took place and lasted about almost 2.5 weeks?
So again, the mid and small cap, there have been a few interesting plays. So you look at it, it's largely been profit booking. I haven't seen broad-based selling. So some of the names that are coming up: Prism Cement, Prestige Enterprises. Another interesting sort of switch that happened was on the Tube Investments. So after the demerger, HDFC, AMC decided to switch out their Tube financial holdings and instead go and buy Tube Investments. So that's a switch that's happened on the mid-cap side, and a few other sort of Dr. Lal Patlabs is where we've seen actually money being taken off by table by a couple of AMCs, and I'm talking about not just profit booking but entire stakes being sold there.
Right. Okay. So that's the sense that we're getting from some of the mid and the small cap index. But it's interesting, Kaustubh. I mean, you still maintain, irrespective of what has happened, not just for our markets, but the fact that we've, aligned ourselves with the global weakness, and there is that added 10% long-term capital gains tax as well, which came by in the budget, that you continue to believe that all that we've seen in the last 2.5 weeks has only been profit taking. You're not really seeing any capitulation or big sell-off which has transpired. Is there any sense that you're getting that just maybe people are still complacent about what's going on in terms of the macros? I mean, do you believe that we may just be headed in not about of that sell-off coming in? Is there any wariness in the positions that people are taking in the market right now? Or they're confident that what we've seen, the worst is behind us and it's time to move forward and start buying into quality names already because you're getting them cheaper?
Sure. So, Aisha, a couple of things. So, one is if you look at foreign institutions, they've actually been selling it. So, while they bought heavily in Jan, Feb has been selling, and it's a bunch of factors. Obviously, impact of the LTCG, they're reviewing what they're going to do, and also because the way the US economy is going, the way the bond yields have risen there, it's but expected that money will move out in spurts, and that's happening. We've seen that in 2017, and 2018 is going to be no different from that perspective. But the good sign, and what we've seen is domestic money continues to flow. So domestic fund managers are flush with, obviously they got cash, they're getting inflows every month. It's not slowed down, so clearly they are going to look at opportunities, and opportunities like this present themselves, they will look at picks. The one thing that we've seen them doing is whenever they get a profit opportunity, they will take it. At the same time, they're also trying to de-risk. So an ITC is a classical trade where you'll get into a more defensive play, so we've seen managers load up on that. But clearly, unless there's a huge slowdown in the flows that are coming from retail and domestic investors, I don't see that domestic institutions are going to stop buying. They're going to continue to prop the markets irrespective of what the foreign institutions are doing.
Okay. Kaustubh, we'll let you go at that. Thanks very much for taking out the time to speak with us this morning. Really appreciate your insights and thoughts on where funds are parking themselves and, of course, parking out as well.